Hello, I'm Thibaut Cuillère, Head of Real Asset Research at Natixis, and I'm glad to present to you our updated views on the green and sustainable market, together with Radek Jan, our infrastructure and green specialist, Jennifer Levy, our covered bond specialist, and Jean-Christophe Machado, our Euro rates strategist. First of all, let's remind what we call hereafter green and sustainable bonds. Any type of instruments where the proceeds will be earmarked for climate, environment, as well as social projects, so asset-linked bond, as well as sustainability-linked bonds. For what is green, social, and sustainability bonds, in line with the Greenbone Principles and the social bond principles, 4 core components define the nature of the bond: the use of proceeds, the process for project evaluation and selection, the management of proceeds, and the reporting. The green projects should provide clear environmental benefits, and several categories are recognized by the Greenbone Principle for that, such as climate change mitigation or adaptation, natural resource or biodiversity conservation, but also pollution prevention and control. For the issuance of social bonds, the main examples of social projects earmarked include affordable basic infrastructure, affordable housing, access to essential services, but also food security. Sustainability bonds are bonds where the proceeds will be exclusively applied to finance or refinance a combination of both green and social projects. And finally, the sustainability-linked bonds, we call SLB or transition bond, include any type of bond instruments for which the bond's financial and or the structural characteristics can vary depending on whether the selected KPI reach or don't reach the predefined SPT, which is the sustainability performance targets, the potential variation of the coupon being the most common example for that. So in the following presentation, we'll analyze the trends in issuance and outstanding of green and sustainable bonds in Q1 2021, as well as the trends in pricing of those instruments. It's obviously a great opportunity for issuers when they are able to tap the green and sustainable market at better conditions than the conventional ones. So comparing the demand with conventional instruments, the capacity to tighten spreads versus the price talks and the new issue premium are important criteria to consider for potential issuers of green and sustainable bonds. It is also the case from an investor point of view, and the latter will also watch out the development of prices between the green and sustainable bonds and the conventional ones in the secondary market, which is what we call the secondary market Greenium. After having seen the main trends in green and sustainable bond market, what we have seen in 2021 for Q1 was a tremendous increase in supply as well as in outstanding for green and sustainable bonds, again, I would say, after what we have seen in Q4 2020. But the sharpest increase is undoubtedly coming from the social bonds, where the supply has been multiplied by 6 times in Q1 2021 versus Q1 2020, as you can see on the chart of the slide 4. It's also worth noticing that the transition bond market has really taken off in Q1 21, with 17 times higher supply than in Q1 20. And particularly, it was the case in USD denominated format, where we have seen 4.3 billion euro equivalent, half of the total SLB issuance in Q1 21. If we look further on the slide 5, we see the big trends in terms of supply for green and sustainable bond markets in Q1 21. And clearly, the total market in terms of issue size amounted to 210 billion euro equivalent, which was another record quarterly issuance and 3.5 times more than in Q1 20. And 57% of that has been issued in euro-denominated format, so slightly higher than the average market share of the euro market. If you look at the picture top right-hand side, you also see the trends in the outstanding of green and sustainable bonds. And now the total outstanding is reaching 1.2 trillion euro equivalent, which is a 20% increase versus end 2020 outstanding levels, and clearly dominated by the supra and agency segment, on which we will come back later on. Finally, if we turn to the slide 6, we see the penetration rate for green and sustainable bonds. First, on the chart left-hand side, you see the trend in the penetration rate on the primary market. And again, what we are seeing is a huge increase of penetration rate in all the currencies of issuance. And particularly if we look at the euro market, it has been 27% of all bond issuance, excluding sovereigns, in Q1 21 being issued in green and sustainable bond formats, versus 17% in 2020. If you look at the chart right-hand side, you see that the share of green and sustainable bonds in total bond outstanding is also rising in all the currencies. In the euro format, the penetration rate of green and sustainable bond outstanding is now reaching almost 6%, excluding sovereigns. And it's bigger than 1% of USD outstanding now. So those two markets are seeing a huge increase in penetration rate in outstanding terms. Obviously, they are still far from what we are seeing in the SEC market, which is still the dominated market for green and sustainable bonds issuance and outstanding, where green and sustainable bonds represent more than 20% of the total outstanding.
Hello everyone, my name is Radek Jan, and today I will talk to you about the pricing of green, sustainable, social and sustainability-linked bonds in primary markets, and how does that pricing compare with conventional peers, with conventional bonds from the same type of issuers issued at roughly the same time. Actually, what we can show through our analysis is that now, at least in the euro-denominated market, across several asset classes, we have pronounced and consistent differences in investors' appetite and consequently in pricing between green and sustainable on the one hand and conventional bonds on the other hand. So to do that, we will show you 4 slides, which each present different asset class. And for each of these asset classes, we look at a couple of indicators to gauge investors' appetite for these types of bonds, and then look at what happens in the primary market at the moment when these bonds are introduced to financial markets. What happens in terms of pricing? How do the pricing dynamics differ? So let's begin with the first slide, which looks at BBB rated corporate bonds denominated in euro. You can see 3 graphs. The one to the left shows you oversubscription rates. The one in the middle shows you spread versus initial price talk, tightening at launch. And the one to the right shows you the trends in new issuance premia. And each time you see 2 bars. One of them is gray, one of them is green. So each bar represents 1 quarter, 1 trimester. And the gray bar represents the average value for these indicators for conventional bonds in that category. And the green one represents together green, social, sustainability, and now also sustainability-linked bonds. So we always compare, we always look at the values at the 2 bars for each quarter, each trimester. So what can we say about the BBB rated corporate debt in general? Well, the pricing dynamics exhibited by euro-denominated BBB rated corporate debt are consistently in favor of the green and sustainable bond format. And these differences between green and sustainable bonds and their conventional peers, they have actually become a little bit less pronounced throughout Q1 21, so the last quarter, but they are still there. They are still visible, observable. So we start with the first indicator, with the graphic to the left, which shows you the trends, quarterly trends in oversubscription rates. So what is that? It's simply the ratio between the orders and the size of the issuance. How much was the order book bigger than the original size of the issuance? And we use that, we look at oversubscription rates to indicate the magnitude of investor appetite for bonds at the moment of their issuance. So what we can say here about this asset class is that clearly investor appetite for green and sustainable BBB rated corporate debt denominated in euro far exceeds their demand for similar conventional bonds in the green and sustainable because the green and sustainable bonds in this category, on average, they do exhibit much higher oversubscription rates. Actually, in all but 3 quarters since the beginning of our observations in 2018, you can see that in the graphic on the left, the green bar is almost always higher up than the gray bar, which is a good news for issuers who want to issue green and sustainable bonds rather than conventional ones, because usually they attract higher orders, and they also can diversify their investor base by attracting new types of investors who look specifically for these bonds. Now, this stronger investor appetite for green and sustainable format compared to conventional one has pricing differences, results in pricing differences between these two formats. How can we see that? Those are the two other graphics, the one in the middle and the one to the right. The one in the middle shows you trends, quarterly trends in spread compression between the time of the IPT, the initial price talk, and the time of pricing. And this is, of course, closely related to the first graph, to the oversubscription rates. What happens in the market, what happens in the primary market when bonds are introduced there, is that as part of the pricing process, bonds experience spread tightening. So essentially on the graphic in the middle, the bars, they are all negative, they all go down. That's the spread tightening. And stronger investor demand for a bond, which is reflected in higher oversubscription rates, this stronger demand results in higher spread compression between the time of the initial price talk and the time of the pricing. So in the graphic in the middle, you can see that by the bars, the green bars going a bit lower, they are more negative, the values are more negative than for the conventional, for the gray bars. So this is, again, good news for issuers of green bonds. What happens here is that due to this stronger investor demand, euro-denominated green and sustainable BBB rated corporate bonds, this is what we are showing you on this slide, they do experience, on average, higher spread compression. In other words, they do achieve a larger spread tightening versus the initial price talk compared to their conventional peers. And this was the case, as you can see in the graphic in the middle, in every observed quarter since the beginning of our observation, with the exception of one. But maybe the most interesting thing, the new issuance premium, the trends in new issuance premia, that's the last graphic, the one to the right of the slide. What is that? Well, new issuance premia, they refer to extra yield received by the buyer. So in other words, paid for by the seller, the issuer, for a newly issued bond. Relative to what? Relative to how other bonds from the same issuer trade in the secondary market at the time when this new issuance is priced. So to calculate these new issuance premia, we do a couple of things. We build yield curves for such issuer, for each issuer in our sample, and then we interpolate the secondary curve on the maturity of the newly issued bond. And this way we calculate the new issuance premia to see, if there are pricing advantages for green and sustainable bonds compared to conventional ones. And we show that yes, there are. And for this category and for a couple of others that we will talk about later, this is quite interesting because not only the green and sustainable bonds display a lower new issuance premia than conventional bonds in this category. Also, the average new issuance premia displayed by green and sustainable bonds in this category, they have actually turned negative since the third quarter of 2020, and they have stayed negative ever since on average. While the average new issuance premia values for conventional bonds in the same category, they still remain positive. So when that happened for the first time throughout September 2020, we were wondering if it's just a temporary feature, if it's just the market being too euphoric at the time, because that were the time when people were thinking that, maybe COVID is over and life is coming back to normal. But actually it wasn't that. It was mainly because at the time and since then, you got many issuers arriving to the market for the first time with inaugural green and sustainable issuances. And this is actually something that keeps happening until now, which is sort of responsible. We can attribute the negative average NIPS to this phenomenon. Throughout all the past 3 quarters in this category, you had many new issuers arriving to the bond market for the first time to do green or sustainability linked or social bonds. let's just have a look at, and this was reflected in very significant pricing advantages. So let's look at just a couple of examples. We can actually divide this into a couple of categories. For instance, in some sectors, it was really the first time issuers from a given sector arrived to the green market. This was the case typically for cars, for automakers. You had green bonds from automobile producers issued in September 2020. That was the first time when we observed the large negative NIPs, new issuance premiums in this category. For instance, the Volkswagen 8-year green bond displayed a new issuance premium of -7 BP, and they also issued a 12-year bond, which displayed also a green bond, which displayed NIP of -14 BP. And at roughly the same time, you got Daimler, also a car maker, entering the green bond market for the first time and displaying a new issuance premium of -14 BP. So these negative new issuance premia, they are of course very good news for the issuer. You want to have your NIP as low as possible, and if possible negative. That's exactly what you are looking for when you issue a bond as an issuer. Now, how to explain all the other negative NIPs, negative new issuance premia? In some cases, it was also a structural first of a kind. When an issuer issued, for instance, or the entire sector issued something new, just like with the car makers, you also had the very first sustainability-linked bond issued in September 2020 by Holcim, 11-year bond. It was the first type of this bond in the building material industry. Sustainability-linked bond, it's a new type of financial product which only got formally defined last year. It's not use of proceeds bonds as all the others. It's a general corporate purpose when, as an issuer, you commit to some kind of trajectory, you commit to achieve some sustainability targets over time, and then the financial structure of the bond actually depends on whether you achieve or whether you fail to achieve these targets. And there are also many, many others. Let's just mention them quickly. When some other issuers, again, entered to this financial space, to green and sustainable finance, for the first time, and displayed some, and their issuances were sort of awarded, they displayed negative NIPs in return. For instance, you have the first green bond from Arkema, first social bond from ICA Sonte, first sustainability bond. Sustainability bond is a mix of social and green from Orange. These all displayed negative new issuance premia in the third quarter, and throughout the fourth quarter of 2020, the trend continued. And interestingly, the same keeps happening, although with a little bit smaller magnitude. The average NIPs, average new issuance premia for green and sustainable in this category, they are still negative on average in the first quarter of 2021, but a little bit less. But still, there were several issuers in this quarter, in the first quarter of 2021, whose issuances also displayed those negative NIPs. For instance, Ahold issued a new sustainability-linked bond. We also saw sustainability-linked bond from Tesco. We had Citycon and Vonovia, each issuing inaugural green bond. And the same was also the case for IKEA. IKEA actually issued 2 green bonds in the same day, in January 2021, and they were both met, they both displayed negative new issuance premium. And the lowest new issuance premium, -20 basis points, was displayed by CBRE, 7-year green bond, which actually managed to get sort of 2 trophies. It was the first ever direct issuance from a SICAV structure. SICAV is open-ended, publicly traded investment fund. The first one, the first direct issuance from SICAV in investment grade part of the market, part of the corporate bond market. And at the same time, it was also the first issuance executed directly from the fund level entity. So investors were quite excited about this one. And then you had Daimler, which we already mentioned, which entered the green bond market for the first time in September 2020 with a successful issuance of green bond with negative new issuance premium. They came back in March 2021. Daimler issued another 12-year bond, which also displayed negative new issuance premium. This time a little bit lower, -5 BP. And we also had another green bond from frequent issuer, Digital Dutch Finco, also with a negative new issuance premium. So just to wrap up, what we can see is that clearly for BBB rated corporate debt denominated in euro, you have investor appetite strongly exceeding their appetite for conventional bonds in the same category. And this results in pricing advantages. The spreads, they do tighten more on average against the initial price talk for green bonds. And the new issuance premia displayed by green bonds tend to be lower, and for the past 3 quarters, even negative on average. So this was the BBB rated corporate debt. Now let's move to another category. And now let's move to another slide. We will show you exactly the same types of indicators, but for a different category of bonds. This time, we will stay in euro denominated, but we will look at financial debt. First at senior preferred and after on senior non-preferred. So for the senior preferred financial debt, the dynamics, the pricing dynamics and investor appetite are actually very similar for the green and sustainable bonds as to what we have seen for the BBB rated corporate, meaning that again, investor appetite for green and sustainable bonds in this category is much stronger. It far exceeds their demand for similar conventional bonds, and green and sustainable bonds therefore exhibit on average far higher oversubscription rates in every quarter since Q2 2019. And this difference in oversubscription rates, the first graphic to the left, has become particularly pronounced throughout 2020, as you can see that the green bars are far higher than the gray bars. So again, this strong investor appetite, it has 2 direct consequences. The first one is shown in the graphic, on the graphic in the middle. The green and sustainable senior preferred financial bonds, they do experience on average higher spread compression versus the initial price talk than their conventional peers. For this category, this was the case in every observed quarter since the second quarter of 2019. So again, good news for issuers of green and sustainable bonds in this category. And the last graphic, the one to the right, shows you again the quarterly trends in new issuance premia. And thanks to this stronger investor appetite for this category compared to conventional, the green and sustainable bonds, they do display on average lower new issuance premia than their conventional peers. And as you can see on the graphic, on the very last bar, the very last green bar doesn't go up like it does for all the others. It goes down. It means that the average new issuance premia for this quarter for green and sustainable are actually negative. They turned negative for the very first time in Q1 21, just as happened before in Q3 20 for corporate BBB. So now we have the same kind of thing happening, the same dynamics being spread to the market into another category. So why was that the case? You had a couple of successful green bond issuances in this category, which were met with such market interest that actually the new issuance premia were negative. For instance, Sparebank's 7-year green bond, second green bond from this issuer, displayed a new issuance premium of minus 18 BP, whereas the only conventional bond with a negative new issuance premium in this category was a 7-year bond from Société Générale, conventional one, with a NIP of minus 1 BP. It's also important to do this comparison through time, because new issuance premia, they depend on a lot of economic factors, on macroeconomic conjuncture, for instance. So sometimes they are lower or higher by default because of the time when these bonds arrive to the market. So this is why we do this comparison by quarter for comparable bonds from comparable issuers, meaning comparable size, comparable type of issuer, issued at roughly the same time. Because this way we can make sure that we control as much as possible for the general market fluctuations. So again, just to wrap up this part, green bonds issued in this category, negative average NIP in Q1 21, not the case, or just very slowly, very weakly for conventional bonds. So again, a substantial pricing advantage for green and sustainable format in this category. And now let's have a look on the third slide. Here we will show you the same, but for senior non-preferred financial debt. And here it becomes a little bit more interesting, because while the trends in average oversubscription rates and average spread compression versus the initial price talk are less consistent over time for this asset class compared to what we have seen until now, meaning that sometimes it's favorable for the green and sustainable, sometimes it's roughly similar between the green and sustainable and conventional. We actually have the same type of phenomena for the new issuance premia. So when you look to the right, the graphic to the right, again, you will see that the very last bar, the green one, goes down, is in the negative territory, and the gray one still goes up, is in the positive territory. So this is, again, for the very first time, just like for the previous category, that you have average negative new issuance premia for green and sustainable bonds in this category, while the average new issuance premia for conventional bonds remain positive. So actually the reason for that is quite similar to what we've seen previously. You had a couple of issuers coming in this category to the green and sustainable bond market for the very first time with their inaugural issuance. And again, this was met with high appetite, high interest from investors, and resulted in better spread tightening and low or even negative new issuance premia. Let's just have a look at a couple of examples, all issued in Q1 21 in this category. For instance, Bayern LB issued a 7-year inaugural green bond in February 2021. This was met, this displayed new issuance premium of minus 15 BP. Hypothek Bank from Munich issued an 8-year green bond, again for the first time ever by the issuer in March 21, displaying a new issuance premium of minus 11 BP. And Bank of Ireland also came to the market in this category with, again, inaugural green bond, which was met with new issuance premium of minus 5 BP. So here we actually have, interestingly, we have the same trends in average new issuance premia. They are now negative, while the spread tightening and the oversubscription rates are, let's say, not as clearly in favor of green and sustainable bonds in this category as was the case in previous categories. And now let's have a look at the fourth category, single A rated corporate debt, again denominated in euro. As you can see, the three graphics look a little bit different than they did previously. This is because the pricing dynamics observed over the past few quarters in primary market for this category, for single A rated corporate debt denominated in euro. These pricing dynamics, they stand in a sharp contrast to dynamics that were exhibited by all the other asset classes we were just talking about. On average, there are similar oversubscription rates between green and sustainable bonds and their conventional peers. And actually, the spread tightening at reoffer versus initial price talk is slightly weaker for green and sustainable bonds compared to their conventional peers. And the new issuance premia for green and sustainable bonds, they are higher for the green and sustainable format compared to their conventional peers. So here, as you can see, the situation is quite different, less favorable to the green and sustainable format for the time being. When we look a little bit more in detail at the first graphic to the left, we can see that the investors' appetite for green and sustainable bonds in this category used to significantly exceed their demand for comparable conventional bonds between Q4 19 and Q2 20. After that, both the green and sustainable and conventional bonds in this category were on average roughly similarly sought after by the investor community. They were roughly at the same levels of oversubscription. And as a consequence, there were on average no significant pricing advantage for the green and sustainable bond format in this category over the past few quarters. So this stands in sharp contrast to all the other categories we were looking at. No pricing advantages here for the green and sustainable. Let's have a closer look at the last graphic, the one to the right, showing trends in average new issuance premia per quarter. We can see that, again, very sharply contrasting with what we have seen in all the other observed asset classes. While the average green and sustainable new issuance premia were turning negative elsewhere, the green bar was going down. Here in this graphic, you can see that even the last one is still up. It means that the green and sustainable bonds, their new issuance premia in this category are not only remaining positive, but in this case, for the single A denominated in euro, corporate debt, they were actually higher on average than the new issuance premia of conventional bonds. So far, we had only 4 green and sustainable bonds in this category, issued in this category, that ever displayed a negative new issuance premium. But it was in the past, it was not in this quarter. We had 1 green bond, 10-year green bond from Prologis, issued in June 2019, which displayed a NIP of -9 BP. We had a green bond from Aleander, 10-year, issued in June 2020, displaying a NIP of -9 BP. We had another green bond issued in 2020 from Natixis, 12-year green bond, with a new issuance premium of -4 BP. And the last one, sustainability bond, issued by Adidas, 8-year bond, issued in September 2020. This displayed a NIP of -5 BP. So as you can see in this category, we had so far only 4 green and sustainable bonds displaying a new issuance premium which was negative. So on average, those new issuance premiums still remain positive in this category. But of course, this can change over time when you will have more and more issuers coming to the market for the first time, doing something new, doing something innovative. Then we can expect that the market will reward them, so to speak, that these issuances could display significantly lower new issuance premium than conventional bond would have, and potentially even a negative one. So just to wrap up, for BBB corporate debt and for senior preferred financial debt, you had very strong pricing advantages in favor of green and sustainable bonds. For senior non-preferred, you also have these advantages, even though they are less pronounced. And for single A corporate debt, all of that denominated in euro, the pricing advantages are not here over the past few months, but they can, of course, follow the same pathway as the previous categories did. So one thing that we are very curious about is whether this trend of negative average new issuance premia will continue in those 3 categories where we have already observed them over the past quarters, and whether this will also expand to other asset classes eventually. And to get answer to that, we will of course provide you with another green bond review in 3 months from now, so in July 2021. Stay tuned. Thank you.
Okay, so what we have seen is that despite the boom in green and sustainable bond issuance volumes across all market segments, what we have observed is that the supply-demand imbalance for this asset class has become pronounced since the end of last year. Negative new issue premiums are becoming widespread for GNS issuance in the Euro credit markets. A few cases can be highlighted there. There is the case of Telecom Italia inaugural issue of sustainability bonds, the maiden issues of sustainability-linked bonds by Aerated and Tesco, which came at negative new issue premium, the first Acea Greens, as well as the first sustainability hybrid issued by Telefonica on the 3rd of February, which also came with a negative new issue premium. Besides this Greenium in the primary market, what we have observed is the more widespread application of a Greenium in the secondary market since last autumn. To check this, we have constituted green and sustainable sample and conventional issuance panel 2 for Euro corporates, senior preferred bank debt, non-preferred senior bank debt, NGC and supranational in Euro, as well as dollar corporates, which is what you could see on the slide 12 chart left-hand side. What we observe is the following. An increase in the premium commanded by green and sustainable assets since the autumn of 2020 across all market segments. On average, this premium represents 5 to 7% of the current average debt spread for corporate and financial deals we have analyzed for Euro, as well as for dollar corporate issues. And it's between 1 and 1.5 basis points for Euro-denominated agencies and supranationals, as you can see on the chart left-hand side. Moreover, what we see is that the Greenium goes rising as the maturity of the issue increases. And you have the example of the non-preferred senior debt market by maturity on the chart left-hand side of the slide 13, where the Greenium is between 4 and 5 basis points for non-preferred senior debt with a maturity of 5 years or over, but a Greenium of near zero for maturities of 1 and 3 years, and of around 2 basis points for maturities between 3 and 5 years. For dollar-denominated corporates, we also see that there is an average Greenium in the secondary market of 5 basis points for an average spread of 78 basis points, which means that the premium is around 6% of the spread, roughly in line with the corporate premium as a percentage of spread. With a large disparity depending on the issue, as you can see on the chart right-hand side, if we take the example of the Cisco 2030, the Greenium can amount to up to 25 basis points, which is the highest Greenium we currently see in the dollar-denominated corporate market. And now let's turn to the analysis of issuance and Greenium in the agency and supranational segment with Jennifer.
Thank you, Thibault. So now let's speak about cover bonds. With an outstanding of 27 billion euros, the sustainable cover bond market has further diversified with new issuers and new countries. Year to date, 3.75 billion euro of green and social cover bonds were issued, compared to 2.3 the same period last year. And during this quarter, there were 87% of green and 13% of social cover bonds out of the total 3.75 billion euro of green and social cover bonds. Their share in the cover bond market has significantly increased since 2019, representing year-to-date 16% of cover bond issuances, versus 2% in the same period in 2019 and 4% in 2020. It is worth mentioning that this market is still a niche compared to the Euro benchmark cover bond outstanding, as it represents only 3% of the global cover bond market. We could also say that the number of green and social cover bond issuers has significantly increased, as we have now around 36 issuers as of end of March 2021. During this quarter, we saw new issuers which joined this sustainable cover bond market, such as Crédit Agricole Italia, whose proceeds were used to finance or refinance green residential building in Italy, Hypo Tirol, which issued a social fund brief in Austria, and Cabana from South Korea with a social cover bond. We had also OP Mortgage Bank, which issued its inaugural green Finnish cover bonds and the first green Finnish cover bond in green format. Overall, we can say that green cover bonds benefit from a stronger investor appetite, benefiting from a higher B2 cover than their conventional peers. However, that said, we can say that during this quarter, their average subscription ratio was lower than their conventional peers, mainly due to the fact that Crédit Agricole Italia transaction was quite low in terms of subscription ratio compared to its peers, around 1.5, as it was the tightest level for a 12-year Italian cover bonds ever. The biggest subscription ratio was for green cover bonds year to date was observed for Hypo Tirol Bank, EG, issued on the 4th March 2021. It is worth mentioning that for the first time, we observed a Greenium on the cover bond market in January. Indeed, DNB Polycredit, a Norwegian issuer, issued in January a 1.5 billion euro 10-year green Norwegian cover bond at mid-swap plus 6 BP. It represented 3 BP tighter than its secondary curve and was able to reach one of the highest order book year to date. In terms of performance, ESG cover bond performed slightly better than conventional cover bonds 30 days after issuances, minus 1.9 basis points versus minus 1.5 basis points for conventional cover bonds, and thanks notably to the DNB Polycredit and Crédit Agricole performance. On slide 16, you can see that we have some information which have been published based on global capital information. A revised draft of the Taxonomy Delegated Act highlights an improvement of the eligibility criteria in relation to the acquisition and ownership of building section. We consider that this revised version is positive for the development of the green cover bond market, allowing existing green cover bond issuers to be taxonomy compliant, as the eligibility criteria for residential buildings require an EPC of at least A or B, which is an improvement compared to the initial version, where the criteria was only with an EPC of at least A. And to recap, we can say that according to the ECBC, 85% of the building stock was built before 2001, sorry. And EPC ratings vary across country. For example, buildings with an EPC A represent 1% of the building stock in some countries, which could have been an issue, I would say, in the previous Taxonomy Delegated Act. We expect that this revised Delegated Act should be published, in our view, by the end of June this year. Thank you.
Thanks, Jennifer. So 2021 started off quite strongly with almost 80 million of green bonds issued by Euro area sovereigns. 2 new bonds have been issued. France launched a new benchmark on March 16th, the OA80 June 2044. 7 billion euro have been sold at 0.44 yield. Demand was quite strong with an order book around 35 billion. A few days before France, actually, Italy stepped into the green world, issuing its first green BTP. The MEF sold 8.5 billion of this new benchmark. Demand was very strong for the first issuance, with almost 80 billion in the order book. Besides those 2 benchmarks, we saw the DSTA tap the DSL January 2040 for 1.72 billion, and the Belgian Kingdom tapped the OLO April 2033 for 0.75 billion. In the upcoming months, we expect the AFT to tap its new benchmark, of course. And after the announcement of a green expected expenditure envelope of 15 billion for the French Treasury, we reviewed our green OAT supply upward to obviously 15 billion this year. We also reviewed our target for Italy, as the benchmark size was higher than expected, and now we target at least 10 billion of green BTP this year. The main event in Q2 will probably be the issuance of the first German 30-year bond in May. And finally, we still expect and we still have hope to see Spain step into the green world this year. The beginning of 2021 has been quite interesting in terms of Greenium. On the Govies side, we saw a strong upward trend in European yield over Q1, but German green bonds outperformed their conventional peers. On the former 10-year benchmark maturing in August 2030, the Greenium reached minus 5 BPs in late March, while it was quite stable between -3 and -2 BP in Q4 2020. Regarding the 5-year maturity, we are now around -3 BP against -0.5 in December 2020. So those Greenium levels show that the green German world is outperforming the conventional world that we have known for years. As you may know, the EU has only issued under the social bond format in 2021. We will probably have to wait until H2 to see some EU green bonds, as the funding of the Next Gen EU program will start. But we will discuss this in more detail in our next green bond review in 3 months, and we hope to see you there. Thanks a lot to everyone, and if you have any questions, do not hesitate to reach out to us. Thank you.